Hello, everyone. Welcome. Welcome, guys. We'll get started shortly. Welcome, everyone. We'll get started shortly. Welcome, everyone. Welcome, everyone. We'll get started shortly. Welcome, everyone. We'll get started shortly. This evening is trading in the zone, trend following and trading systems. We'll get started shortly. Welcome, everyone. Welcome. All right, welcome everyone. Let's go and get started. As you guys know, on Wednesdays, we go over trading in the zone, so mindset, all right, trend following and trading systems. Hey, Solomon, welcome. Hey, Alicia, welcome. All right, guys, let's go and get started. Let's take a look at the markets here, all right? So currently, I know the equity markets were up today, but we're still in the markdown phase. All right. So if you guys are going to trade stocks, you want to be very careful. All right. We are in the markdown phase. Currently in the futures market, the Dow is down and still consolidating here. All right. So if you guys look here, hold on. All right, it's still consolidating right in this area here. All right, that's the Dow. The NASDAQ, right here. Guys, look here. Right, this area here. Sellers are still in, right? Here's the S&P. Here's the S&P here. And then here is the Russell, all right? We did get a white candle on the Russell, so we'll see what happens here. it is testing resistance right here. So we'll see what happens here if we can get buyers to come in. All right. So we'll keep an eye on that. Dollar index is still down, but look here, testing that resistance. We've gotten some buy signals in the dollar index yesterday. Had a bit of a reversal today. All right, but right now markets are somewhat undecided. All right, on what they want to do. All right, let's see here. So here's the market right here. Here is VIX. So we're watching the VIX, right? And we need the VIX to stay above 20 if we want the market to become more bearish and move lower. All right. So it's at 22 right now. 22 right now. If it moves lower, below 20, that's bullish for the market. If it continues to move higher, all right, above 20, that's bearish for the market. All right. So right now it's kind of mixed, but towards the downside. All right. And I'll open the floor in a few minutes for any questions. All right. The sectors. So here are the sectors here. So as you guys know, when we trade stocks, we don't just start buying stocks, right? So we want to pay attention to what the market is doing. So the Dow, the majors, the Dow, the S&P, and NASDAQ, right? They're all down. All right. And then the sectors. So biotech, healthcare, right? Industrials, energy, consumer staples, utilities, right? Consumer discretionary, they're all down currently right here. They're all down. All right. So if you're going to trade stocks, hey Dean, welcome. Welcome. You can trade, but just be careful. Pay attention to that specific stock and make sure that buyers are getting in on a break of resistance, all right, and that it's solid in the markup phase. All right, if it starts breaking down, getting into that markdown phase, you've got to get out, right? Because right now the pressure is on the market to move lower. All right. We talked about this on Sunday. All right. Peter had mentioned gold and silver. All right, gold and silver. Those are the two sectors that are really moving higher. There's a play available in natural gas. All right, so gasoline, but really gold and silver. That's the only sector really where we're seeing some really good, decent price action. All right. So we want to follow the trends, all right? We want to make sure we follow the trends, all right? So here is our stock boss. So this is our stock boss system here with heat seeker. So here are some stocks here. All right, here's some stocks. And normally we get a lot more stocks in stock boss, but we do have a few technology stocks. So let's take a look at how the stocks are doing. Yeah. Hello, Bay, welcome. All right, so that's a pretty good one here. All right. Here's another one here. These are technology stocks. All right, so you can trade. This one gapped up here. So you can definitely trade, but just be careful. All right, just be careful. All right. All right, this one is still setting up here. Still setting up here, no buy signal. And this is in stock boss for Hills Heat Seeker. All right. And I see we've got some new faces this evening. Welcome, guys. All our new traders, welcome. Hey, Corey, welcome. Hey, Betty, welcome. All right, buy signal here. All right. So although the market is very bearish, there is some opportunities, but we've got to be very selective. We can't just go out and buy stocks. All right. This one is breaking out here. Really nice markdown phase. All right. So we want to use our system, right? Trend following. And again, we want to be very selective. All right. Here is a decent one here. And again, this is in stock boss. So really nice markdown phase. All right. Beautiful setup here. All right, look at that. This stock fell from, what's the high here? Oh boy, look at that. So Dean, you've got stock boss, and who, any of our stock boss traders, this is one you guys want to put on your radar.
Okay.
All right. This is one you want to put on the radar. Let's take a look at this on the daily time frame. We see it fell from $40 to $4.50. Never give a buy signal. This is our markdown phase, right? Where sellers are in control. So we want to wait, right? We want to follow the system, right? Follow the system, follow the trend. All right. Hey, Carlis, welcome. All right. So let's see here. Let's go to a weekly time frame and see the potential here. So it fell on a weekly time frame, it fell from $100. All right. So $112, and it fell all the way down here. So a really good opportunity to buy. Even if the market goes against you, all right, you've got pretty good protection at the bottom. And I'll show you guys this. All right. So those of you who are trading heat seeker and stock boss, like you, Dean, these are the opportunities you guys can take a look at and trade, even if the market isn't favorable right now. All right, let's take a look at the monthly chart. Same thing on the monthly. So a high of 110, right, of 110. So when we trade, we don't just randomly buy, right? We want to do this type of work. So it fell from 110. And I always say this, we'll let someone else buy it at 110, right? And write it down. We'll wait at the bottom.
David, I have a question.
Yes, go ahead, Dan.
I know you keep saying don't worry about the news, don't worry about the news, but it's just my instinct to understand why was it at that high that specific point in time, and why did it make such a drastic fall? And it's over a period of time. It's not just immediate. I mean, I mean, you see it's months and months and months that it continuously went down. Should we not, before getting in on that buy signal, should we not understand the why did it behave that way, and why is it now turning? And is it too soon to jump in at the? Should we wait for confirmation at a higher high? It's just I have all those questions.
Okay. Well, you guys know how I feel about the news, right?
Yep, I know.
All right. So, we've got, I mean, think about it. It's really, you've got to look at your time, right? So we have lots of stocks here, and this is not a lot compared to when the markets, the Dow, S&P, Nasdaq, right, Russell, when they're bullish, when the sectors are moving, right? We'll have a lot more stocks than this. You guys will have seen that before.
Yeah.
So even here, to go through each one of these and to figure out, right, why it came down and why it's moving higher. Can you do that? But it's a waste of time. Doesn't matter. All right.
Yeah.
We know why. We know why it came down. We know that. We know why. We know why it went through this markdown phase here. Right. The market went through. The market was been selling off. Right. It went through a markdown phase.
Yeah.
All right. So keep in mind, 80, 90, 95% of stocks will follow the majors, right? So the broad indexes, so the Dow, the S&P, Nasdaq, and Russell. All right, and they've struggled for a bit, right? That whole Christmas rally failed. All right, so we know why this happened here. All right.
So is there a way to see similar? I mean, so okay, and so if we know that the market, this is due to market activity, it's going down in this, and I logically I'm going to say, well, what else? What other ones have a similar pattern to this? Because that's a good markdown. There must be others that have a similar pattern? How do we identify that? Is it just through heat seeker or just going through them one by one?
Yeah, just going through one by one. No, I'm not saying that this stock might not have some fundamental data, negative
Mhm.
data that might
Yeah.
cause this also to
Mhm.
go down like this. But what
Yeah.
but we know that the market is bearish. It's been bearish, right? You know,
Yeah.
it's
Yes.
tried to make some new highs. So I would just say overall. Now you can get more specific, right? If you wanted to, yes, you can go in. That's going it's it's more work, right? But then
Mhm.
we are basing our trades on something else other than price action.
Got it.
All right. Yeah.
Price
Once you
action.
yeah,
Trend.
once you get into that world, right, of fundamental data, right? And once you start digging in, right? So it's not about price action now. You're looking for some driver, some fundamental driver to help us, right? Give us that good feeling about the trade, right? And so what I'm saying is that it really doesn't matter, right? Just assume that the reason it went down was because of negative news, negative data.
Yeah.
And the reason why they're buying it now, right, is because of positive data.
Yeah.
Okay. And I know it's hard to adjust to. Okay. But it's what we have to do. Otherwise, oh, and we go through this all the
Yeah.
time. That
Mhm.
one second. And I do want to analyze. I do want to
Yeah.
analyze this position here, but let's do this here. And that's why we use the systems. We follow the trends right here. This was an upward trend. Let's move it to a weekly time frame. So we're going to assume that the reason it went up all the way up to $100 right here, all the way up to 110 right here, right? Green candles, right? That there was good news. Hey Zaire, welcome. Right? The reason that it came down was because the news wasn't as good anymore, right? It was negative.
Mhm.
All
Yeah.
right. And now we're going to assume that keep in mind that when the institutions because we're not buying it now, right? We as retail traders, right? We don't control the market. The big institutions with their capital control, right, will control the movement of the market. So we just have to assume that they know something that we don't.
Yeah.
All right. So they might have some data, right, that they're hiding away, keeping away from us, right, to move it higher. Okay.
Yeah.
So I mean, I know that's a long answer to your question.
No, thank you. I mean, you keep me rooted. You keep me bring me back to the price action. And that I'm like, okay, got it. Price action, trend, got it.
Yeah, because once we get into fundamental data, we can always find some data out there to justify our position,
Yeah.
long or short. There's always information out there, right? That we can dig up to justify, right, which side of the trade we should be on. All right. So if we like, for example, if we really like Bitcoin, guess what? We're gonna go out there and find the data that's going to support Bitcoin going to 100,000.
Yeah.
Okay. There's positive data out there to help us in our mind, right? So trading in the zone mindset, right? To help us justify why we should stay in. There's news out there to obviously guarantee to justify staying in what is it? API, right? There is news currently to justify, right? Shorting it. Think of it like this. All these negative, right? No one they've gotten rid of this stock, right? From 100 to 450. Right? So that's not positive, right? Is that positive price action for the stock or negative price action for the stock?
Negative.
Negative, right? So why would anyone start buying it right here if it's negative? If all this is negative, right? If it fell from 110 to $4.50, no one should buy it, right?
Right.
Right. But they're buying it now. All right. So the point is, so, the idea is not to do that, not to follow fundamental data, we don't really care about why, right? And you can try it, right? If you want to. Don't make it a practice, but try, right? I would say if you're going to test it, look at earnings, right? Earnings is a good area to test your theories out on fundamental data. All right. If it's good earnings, the price should go up. And if it's bad earnings, the earnings are negative, the price should go down.
Yeah.
But it's a 50-50, right? Because a lot of times earnings will come out, it's good, and you'll notice that the price goes down. And there are times when earnings are negative and the price will go up. So test it out. So then test it out. Test that out.
Yeah.
So that you're not coming back to the fund to wanting to know why. Right.
Yeah.
So so at some point you want to get to you want to get to the place where you just know, right, that you don't need that information. You don't need fundamental. You don't need to know why. You don't need to know why, basically, right?
Got it.
Yeah. And we want to get to the point where we are solid in that. Yeah. All right. So work on that.
Yes. Thank you, David.
Yeah, you're welcome. And we all do, right? And I had to do this. I tell you guys, I don't know these symbols. And when I first started trading, I knew all the symbols, a lot of the companies, and I intentionally do not try to remember any of these symbols. All right, so that it doesn't interfere with my judgment of the price action. All right, we want to keep the price action. We want to, when we look at price, we want to look at the pure price. And we want to look at it in terms of support and resistance for market phases. And we want to look at it as buyers and sellers. Sellers, buyers came in here, buyers came in here, buyers came in here, sellers, markdown phase, right? Support, resistance, green candles, buyers are coming in, buy signal right here. Boom. Right? Boom. That's it. And that are we getting a fair price? Are we getting a good price? Right? Are we a good price? All right.
One final annoyance, if you will. Looking at this and looking at the there's I see two previous consolidations where it went green and it failed. Would it be, but with no buy signals? Okay, never mind. I answered my own question.
Yeah, so we didn't have buy signals here, right? No buy signals here. All right.
Right.
And there's no guarantee. There is no guarantee that when we trade, it's all probability. All it
Yeah.
is probabilities, right? It's a game of probabilities, game of chance. It really is, right?
Mhm.
No one knows, right? No one knows, right? So what we're doing is we we're not gambling, but it's kind of like gambling, right? I mean,
Mhm.
we,
Yeah.
as traders, we don't want to call it gambling, right? We don't want to say that
Mhm.
we're gambling, but we are playing with the odds,
Yeah.
all right? We are playing with the odds, right? So when we look at this, we're looking at risk reward, all right? So here is where it came from $110 and it's at 450. If we were going to buy anything out there, right?
Mhm.
Anything, and just think of this as just you guys, your personal things that you buy every day, right? For your personal home items, whatever, right? Clothing, right? We all want a discount. So let me ask, is this a discount?
Absolutely.
Yeah. Yeah.
Look at the potential. Yeah.
Yeah, it's a tremendous discount, right? For going from 110 to 450, a tremendous discount. So that's the way we want to, look at it, right? We're getting a discount. Now, go ahead. You're going to say something, then?
So, again, looking at it, yeah, I'm going back on the things that you've mentioned in the past that I've written down and kept track of. I don't see any big green candles there. I kind of see, yeah, I see a buy signal, but it's kind of like just broke, resistance. It's on the buy signal. I don't see any. So am I to assume that the institutions, the big institutions, have not gotten into this, but we do have, I don't know, buyers interested in it for whatever reason. Okay, let's throw it. We don't care what the reason is. We just see that it's a buy signal, but I don't see a big, like I see a big red uh candles selling on the left side. Should I?
We're here. Which side?
Yeah, right there. Yeah,
Yeah.
there and there and there. Some
Okay.
big red signals. So should I be concerned about? Well, I don't see any big green candles to motivate me or entice me to say, okay, oh, the big dogs are getting in. I should be getting into this.
Okay. So, hey, Tracy, welcome, Tracy, welcome. All right. So, remember, now I wouldn't get into this heavy, right? Because what do we
Mhm.
have that's going against us right now? What do we have that's going against us right now? What do we have? Where we know that the Dow, the
Mhm.
S&P, the Nasdaq is all in the markdown phase, right?
Markdown face. Yes.
All right. All right. We know that the sectors. So if we look here, we know that
Mhm.
the sectors, right? The sectors are all down. This is
Yeah.
part of technology, and technology
Yes.
is here is tech. It's down. It's
Yeah.
actually
Down.
consolidating down, and it's at 13. Okay,
Mhm.
so we know that's
Yeah.
all against us, right?
Yeah.
So yeah, I'm not saying go out and mortgage the house on this, right? All
Yeah.
right, all right. But you could take the trade. Could take the trade.
Yeah.
All right. And
Mhm.
that's what I'm saying is this. Although the market is bearish, you guys can still find some opportunities. What a lot of our
Mhm.
traders will do is we'll just turn everything off. And just because we say, well, don't trade, right? Or trade lightly, right? The market is bearish, right? All signs
Mhm.
are negative. There will be some opportunities out there. All right. Same thing
Mm.
with Forex, right? With
Mhm.
Monster Scalper, we don't have a rotation right now. Things are choppy right now, but you can still find some opportunities. You can still find
Yeah.
some opportunities, right? Just don't
Yeah.
turn everything
Mhm.
off. All right.
Yeah. Yeah.
Keep in mind, yes, we those big candles, big sellers, big buyers. It's nice to see big buyers come in, big candles come in, right? When we going long. And it's really nice to see that when we break resistance. All right.
Yeah.
And when we go in short, it's really nice to see big red candles, right? Like this to go short, right? But it's not totally necessary, right? A lot of times, yeah, it's not totally anything that comes through stock boss and Dean, you have stock boss. Any stock, we track 22,000 stocks. All right, through Heat Seeker right here and stock boss, 22,000 stocks every day. All right. And so we do a really good job of filtering what's good and what's not good. Okay. So out of the 22,000 stocks, we only got about perhaps 30 or 40 stocks here. So anything that comes through, guess what? All right. They're buying it. All right. Here's 20 million shares being traded here by API. 20 million shares being traded. So that's a lot of shares. Now, compared to this one here, right, that's 342 million shares, and we track it on a 90-day basis. So yes, they're buying it. But what's most important to look at, all right, if we look at it, and what we're doing here is we're looking at it on an individual basis. So we're not looking at the market, right? We're not looking at the Dow, the S&P, the Nasdaq. We know that that's back there somewhere, right? What we're looking at is just the price action, and we are making a decision on the price action here and what's happening right here.
Okay.
Okay. All right. So when if you guys can do that, if you can find opportunities, so if you can use your systems and just you can find opportunities. There are always opportunities. You have to go through, right? Just like we were doing here, right? You have to go through each one.
Yeah.
Right. Let me write this because I was looking at API. Remember, right? We went through, we started with technology right here. So go through each one and make a practice, right? Because your root seeker runs every day, once a day. So just make a practice at the end of the day. Just kind of go through. You never know, right? It's like you're looking for gold, man. Right? You never know when that one pops up. That's a good buy, right? So yeah, just go through them. Here is another one. Here's another one here. Let's take a look here. And we never know. We can go from a markdown phase. We can go from selling to buying quickly, right? So I mean, next week, if buying comes in, right, in the markets, the market can go from negative, right, to positive, and it can do that relatively quickly. All right. So if we're in pretty good positions, that will just help our position, right? Yeah. So here, notice this on the monthly time frame, right? Not as good, a lot of choppiness, right? The other one looks much better, but that's the kind of work we can do. On the weekly time frame, it's not bad, right? It came from $22 to $2.50. All right. On the daily time frame, right? Here is a buy signal right here on the daily. The last time it gave a buy signal and failed was in August. So this might be the buy signal that works out. And if it doesn't, if it breaks support, no big deal, right? If it breaks support, you get out at 192 or so, 188. No big deal, right? No big deal. No big deal. But you're not buying it up in this area in here. Right?
Okay.
So the point is still look for opportunities. Now, you're not going to go heavy, right? Because we know that the overall market is bearish. All right. But if you're savvy, you can look through and find opportunities. You can definitely look through and find opportunities. All right. All right.
Yeah. Thank you, David.
You're welcome. You're welcome. Anyone else? Any other questions? Anyone else on this? All right. Anyone in go ahead.
One final question on the stock boss. I
Uh-huh.
made my screen bigger and I
Okay.
can't resize it. Like I saw you resize that, and I thought I could do the same thing, but when I made my screen bigger, it takes up the whole screen. I can't see heat seeker anymore, and I can't reduce the size of that. Yeah, the right side.
Okay,
Yeah, you see that?
just put your cursor to the edge,
Mm-hmm.
yeah, like right here.
Yeah.
Grab it, and you should be able to move it now.
I don't have that. Yeah, it's weird.
Yeah, so just can you just move it? Try moving it.
Yeah, that's what I've been trying to do, and it's I can do it sideways. I can move it sideways, but not the corner. For some reason, I can't get the corner.
Okay. So after the class, we'll get on and
Okay.
we'll
Yeah.
we'll fix it. Yeah, we'll
Right.
fix
Thank
it.
you.
All right.
Thank
Don't let me forget.
you. Okay.
All right. Okay. Okay. Anyone else? Anyone in I wanted to talk about the dollar pairs. Anyone traded the dollar pairs? Anyone traded the dollar pairs?
Yes, I'm in Aussie, New Zealand.
Aussie, New Zealand up here.
Mhm.
All right. That one should be fine. Where did you get in at then? What price? Did you get in at the buy signal?
Yeah, the buy signal
Okay.
on the 240.
On the 240. Okay. Um, hold on one second. So you've been in it a while then.
Yeah, and then I just, on that long, I just added more to my position.
Okay, so your buy signal was here on the break of this resistance. That's where you entered.
Yeah.
Okay. All right. And someone raised their hand. Okay. I'll get with you in a minute. So Dean, okay. So you entered here, your first position, and then you scale in. You added, you
Yeah.
scaled up. Where did
Yeah.
you scale up? At what price?
Well, it was. I scaled up on the. Hold on, let me see where I am. That was. Oh, just today. This
Just
morning,
today.
actually.
So right in here about.
Learning new vocabulary.
Yeah.
It's a stock boss, or heat seeker. What is all that?
All right. One
Well,
second. I'll let you don't. All right. 1 second. All right. Then here
Yeah.
is your buy.
Yeah.
And then you add it here.
Yeah.
I would wait next time. Okay.
Okay.
Just wait. Wait for what am I waiting for? Anyone? What should Dean wait for? Hollis, what should Dean wait for? Let me ask you.
So I'm gonna say, I always get them mixed up, but
Mhm.
the break of resistance.
Very good. Good job.
Break of
Very good.
resistance.
Break of resistance. But we need your resistance lines to come in. Okay. Thanks, Carlos. Good job. All right. So we need so then we need what could happen is this, right?
I see.
Yeah. So
Basically, that is resistance right there. If it broke that, then I should have get in.
well, let's go through it here. So we want to use the system. All right. We want to use the system to guide us.
Because I went based on the far right resistance. You see that yellow? I said, oh, it broke that. So
Over here,
said,
over
yeah,
here.
yeah. I
yeah.
went by that. I said, okay, it broke that. Let me get in.
No. So we can use this as a guide, but your entries on your support and resistance needs to be within the markup phase. This is your markup phase right here. So
Got
you
it,
want to
got it,
stay
okay.
with your trade. So okay, so what we remember that your this is the markup. This is the markup phase. Now we had a markup phase here, buy on a break of this resistance, right? Failed here, right? Another buy signal here in markup phase. All right. Remember, we need reaccumulation to add. We always need, right, new support and resistance lines to come in.
Yes.
All
Okay.
right. And then we
Mhm.
need to buy. We're only going to buy, add to on a break of resistance because we have new buyers coming in. All right.
Yeah.
If new buyers are not coming in, you shouldn't add because now you add in if it pulls back to here to down to this area here, guess what?
Mhm.
You've got this trade here. So where you might have had a positive trade here, perhaps
Yeah.
let's say to here. Now the trade that you got in here, if it comes down to here, that's gonna put you negative. And now this trade where it might have been a positive trade, a profitable trade, now becomes
Mhm.
everything becomes a whole a losing trade now.
A mess. Yeah. Got it.
Okay. All right. So you can scale up, but we just need to wait, right? Like Carly said, we
Yeah.
need to wait, right, on a break of resistance. So we need
Yeah.
to wait. And what will happen? We just have to be patient. And what will happen if it consolidates here a bit? It's going to automatically bring in your lines here.
Yeah.
Okay.
I see that.
Yeah. Now, if it breaks support, what do we do if it breaks support?
We're out.
Get out, right? So you would bought here, get out here. If it
Yeah.
breaks resistance here, guess what? Now you add to your position.
Yeah.
Okay. All right.
Scale in. Yeah.
Yeah. So don't do anything. Hold on to it. You're in it now.
Yeah.
You're in it. You're in it now. But if it does consolidate, right?
Mhm.
All right. Bring in some new support and resistance, and it breaks resistance. Don't enter another trade.
Got it.
All right. Just keep the two that you have.
Okay.
All right. All right. So yeah. So just remember, if you're scaling up, scaling in, scaling up, just wait. All right. We want to make sure that new buyers are coming in when the price breaks resistance. All right.
Yes.
Okay. All right. All right. Amez, you have a question for me?
Yeah, I want to ask, like, what broker are you using and where are you located, if you don't mind?
Oh, okay. We are located in Orlando, Florida. Orlando, Florida. Yes.
Okay.
And where are you out of? Where are you
In,
located?
in Virginia?
Virginia. Okay, so you're in the States. All right.
Yeah. Yeah.
Yeah, and we use the platform that we use, that the systems here are built on and run on is called Trade Station. Trade Station.
Trade station.
Yes.
Okay, so like in the US, what is like the best broker or platform you suggest? Because I'm new in the stock market. I'm still learning.
Well, for what we do, which is we use automated trading systems.
Mhm.
Trade Station is the best for that. Okay.
Say it again, trade station.
Yeah, Trade Station.
Okay, because
So
I'm using Think or Swim with
okay,
Ameritrade.
okay,
Yeah.
that's a good broker.
Okay.
Yeah, that's a good broker. Now we use the system Trade Station to run the algorithms here that we run, the trading systems, but you can use any platform like Think or Swim to execute the trades. Okay.
Okay. So can you put the name on the description box for me, please, if you
Well,
don't mind?
I'll spell it for you. TRADE trade
Uh-huh. Yes.
station
Trade station.
STATION trade station.
Okay, got it. Thank you.
Okay, and you can go online and look. They've been around a long time. Very reputable.
Okay.
Okay.
Yeah. I
all
really
right.
appreciate the way you were explaining, and yeah, I really like it. Thank you so much.
You're welcome. 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 You're welcome. All right. Let's see here. All right. Any other questions? Any other questions?
And if you don't mind, my question is, because somebody told me about this today and sent me the link. So how does it work? Is it like weekly, monthly, or how does it work?
What's that?
Like what you're doing right now, like
The time frame?
yes.
Okay. So we trading so what we just went over here for stocks, equities, we trade on a daily time frame. So this is a daily time frame.
No, I'm not talking about that. I'm like for the tutorial we're doing tonight. Like how I'm gonna know the next one, or how does it work? How
Oh,
I'm gonna know?
all right. So I would recommend, how did you find us?
Somebody told me that like I
It was
didn't
through
ask
me,
Hello?
Betty. Yeah, it was through me, Betty.
Oh, hey Betty. Hey Betty.
Oh, she's
Yeah.
there. Okay.
Okay, okay. Yeah, so what you could do if you go on our website, you can opt in. You could opt in, or I will send you let's see here. Go ahead and send me an email. Send me an
Okay.
email, and I'll make sure I get you into our database so you start getting information from us, okay?
Okay. Yeah, I'm gonna put my email right now.
Okay.
Thank you.
Mhm. All right.
Yeah.
And here is my email, David. It's David at monstertradingsystems.com. So David at monstertradingsystems.com.
Okay. Got it.
And our website is monstertradingsystems.com with an S.
Okay. Thank you.
All right. And you should see my email in the chat. All right. So
Yeah.
welcome.
I got it, and I put my email in the chat also too.
Okay, perfect.
Thank you.
Got it here. Got you here. Okay. So we'll get you in so that you start getting information from us.
Yes.
All right. Anyone else? Anyone else? Anyone else? All right. I want to spend so anyone else in and by the way, Dean, good trade here. Good job. All right, good job. Good job here. Stay with it. Okay. And that's what I mean. Forex is not, I mean, it's all over the place. Right? But you can still find some opportunities. All right. So, just because we don't have a rotation, a nice big rotations, we like those solid rotations. It's easy to make money, easier. It's never easy, but easier to make money in those rotations. But we still need to trade, right? So but we can't trade everything. We have to be very, very selective. Okay. So good job trading this, good job finding this, right? So we have to go through and then find where buyers are solid, and buyers are solid here, right? Buyers are solid, look like buyers are trying to get solid here. Okay. So just, be careful, but you can still look for opportunities. And the goal is this, and I'll end with this here. The goal is this. If we stop doing anything, if we stop, guess what? We do not learn. All right. So, and as a matter of fact, we will learn more when we trading difficult markets. So if we can learn how to trade difficult markets, that I'm not saying go out there and just trade blindly. You have to know what you're doing, and you have to find these little opportunities, right? Right. When we do that and we build those skills, when the markets open up and things a bit easier, right? The trends, we getting more trends, right? The markets open up and we find lots of opportunities. Guess what? It's easy. It's easy to make money because we've built those skills. We didn't stop trading. All right. And I always tell traders, even if you have to, we did that with Solomon today, right? He took a short trade and he took a very, very low risk amount, a small amount to the ridiculous. If you have to put in, I don't say, don't paper trade. I don't, you need real capital. You need, but if it's only a few dollars, right? $10, $20 trade, that's fine. You still building those skills. You still building those skills so that when things open, and the markets will open up eventually, right? They will open up, whether it's Forex, whether it's crypto, whether it's equities, right? But you will build those skills. And then when things really open up, now you can put some real capital to work. Okay. What I don't like to see is where traders just turn the system off, right? And just don't look at it. Even if you're not trading, still look at it, still watch the markets, right? The markets are they're living, breathing, right? They're living, I call it a living, breathing animal, right? So the minute we take our eyes off, that's when things really start to move. But you can hone in on your skill sets, right? And build those skill sets when the markets are like, choppy like this, right? But you have to know what you're doing. All right. Another question here for me? Aziz? I hope I'm pronouncing your name correctly.
No,
No,
I
okay.
don't have any question right now. Thank
Okay,
you.
I saw your hand still up. Okay, all right.
Oh, let me just.
All right, okay. Any other questions? That's all I've got this evening. Any other questions?
Yeah, I have a question.
Okay. Hey, Alicia, welcome.
So when you do take a trade, how long do you stay in it? Like 30 minutes or 2 hours or what?
Okay, that's a good question. That's a good question. So it depends on our objective, right? So there are certain time frames where we are day trading or intraday trading. All right. So just think of it like if it's a 30-minute time frame or less, 30-minute time frame or less, we are trading intraday. So a 30-minute, sometimes a 30-minute might last longer, but just for this purpose, all right, 30-minute time frame or less intraday, you're day trading. So you're looking to stay in, get in and out for that day, Alicia. All right. A 15-minute time frame, same thing, right? Your goal is to stay in and get out during that day. All right. 1 minute, we usually no one trades on a 1 minute, but a 5 minute, 5 minutes is popular for day traders. 5-minute time frame, you would get in and get out for that day. All right. So that's day trading or intraday trading. All right. Above, I would say 60-minute and above. So 60-minute and 240. Here is a 240-minute time frame here. 240-minute time frame, right? Here is a 60-minute time frame here. So we would use this system. We would trade on a 60-minute. We might look to get in, all right, out for the day. If we're very lucky, we might keep it overnight, okay? But that's basically day trading, scalping, let's call it that, okay? Here, 4-hour time frame, well, the 60-minute time frame, 4-hour time frame, we're more long. We call that a swing trade, all right? We call that a swing trade. So we might stay in that trade a few days. If we are lucky, on a 60-minute a week. All right. The 4-hour time frame is an extended, I call it an extended swing, where if we really catch a nice trend, we might be in that trade for about a month. Okay, a month if we really catch a good trend. If it's really, really good and we stay in that trade, 6 weeks. Right? About 6 weeks. If we're really lucky, 2 months. But I would say a month, on average, a month, if we catch a nice trend. The next time frame that we use is the daily time frame, and we use that more for stocks because stocks take a bit longer to move. So we need to give the stock more time. But there are traders that trade stocks on a 5-minute time frame intraday. Okay, on the daily time frame, that's a position trade. Position trade. So we have day trading, intraday, swing, and then position trade. Those are the three types of trading. All right. On the daily time frame, that's a position trade. And if we catch a trend like here, we might stay in that trade 3 months, 6 months. If we're really lucky, we catch a really nice trend, probably a year. Okay. But the important thing about the time frame is that if it's below a 30-minute time frame, just know that you're going to have to watch it because every 30 minutes you're going to get a new candle. So every candle here, for instance, on that 60-minute time frame is 60 minutes worth of data. Every time it closes, that candle close, you might get a signal to either buy or sell. Okay, so if we think of a 5-minute time frame, every 5 minutes, all right, we've got to watch it, Alicia, every 5 minutes. So if you're working, right, you've got to interrupt your work and get to it. All right. So if you're going to do intraday, anything less than a 30-minute time frame, just know you have to be in front of it, monitoring that trade closely. Okay. That's the way we want to think of the time frames. On our traders like the 4-hour time frame, okay, because a lot of our traders work, right? So on the 4-hour time frame, every candle here is 4 hours. 1, 2, 3, 4 hours worth of data. So we can get in on this trade here, like Dean's trade here. If we go to Dean's trade here, what was it? Aussie, what was it, Dean? Aussie, New Zealand? Aussie, New Zealand. Yeah. So Alicia, every candle here, he's been in this trade for a while. Every candle here is 4 hours worth of data. So he doesn't have to babysit the trade. All right. He doesn't have to, right, go to his monitor every single, all throughout the day to watch it. All right. So that's the difference. When we look at time frames, it's going to be based on how I tell traders, when you get into trading, especially new traders, don't hold your lifestyle around trading. All right. Don't try to fit in everything around trading. Try to get the trading to fit around your lifestyle. It's easier for us to when I do coaching with traders, and Carlos knows this, Dean knows this, right? When I do coaching with traders, I'm not trying to change what you do. All right. Because that's hard. You're not going to quit your job, right? You still have, so you have your work, you have your family, you've got your life, right? You have your life, right? It's much easier, right? To have a time frame, develop a time frame, all right? And even a market that's going to complement your lifestyle. Right now, it's not interrupting. Trading shouldn't interrupt your life. If it does, you're not gonna do it, right? We won't stay in it. All right. It's hard enough to trade. So if we have to change our whole life, what we do every single day to be able to trade, we just will not have much success. Traders have much more success when we can look at your lifestyle, okay, look at your daily routine, all right, and kind of fit a time frame. All right. We have traders that will not trade on a 240, that they like stock boss here and they like on the daily time frame, where once a day they get up from work, they can look at the system. And then we have traders that we could never put them on a daily time frame. Right? They trade on a 15-minute time frame, but they trade full time and they have the time. Okay. and they don't work. So it when you look at the time frame, Alicia, just it's based on the way we do it. It's based on your priorities. That makes sense? Betty, you have a question for me?
Yes, I do.
Okay.
Somewhere along the line, you mentioned the Dow Jones, the S&P. Could you explain how to correlate that with the market, please?
Okay. All right. So we've heard of the Dow, right? The Dow Jones, right? The NASDAQ, the Russell. Those are your major, we call those your major indexes or indices, right? So they represent the Dow, the S&P, the NASDAQ, right? They represent the companies, right, that are out there, right? So the Dow 30, right? So the 30 big companies represent, right? The big companies represent the Dow, right? The S&P, right? Usually those are small cap stocks like the Russell, right? Not the big, stable, big companies, but the S&P has big companies also. But just know that the Dow made up of companies, S&P, the NASDAQ mainly tech companies, okay? But the main thing here is to understand that every single stock will follow. Think of the Dow, the S&P, NASDAQ, and the Russell right here as a barometer. We use this as a barometer for the entire Forex market. So think of this as your command center, right? Your command center, control center for the whole market. All right. So this is what drives the market. So we need to know in real time, every time, how the major indexes are doing, because they drive the market. And because 80 to 90% of stocks will follow, because it's a barometer, they're used as a barometer, right? Your stock will follow these indexes here. So it's critical that we know in real time, every day, what these markets are doing, right? The Dow, the S&P, NASDAQ, and Russell. Okay, so we start with that. All right, I'm not going to get into the VIX, but we'll start with that. That's your major indexes. So if you guys want to trade stocks every single day, you need to know what they're doing in real time. And you need, the most important thing, and we talked about this last night, Betty, the 4 market phases. We need to know whether your indexes, the 4 majors here, is in the markup phase, markdown phase, accumulation, distribution. We need to know because the majority of your stocks and the sectors will follow the major indexes. Okay, so we go from the major indexes, Dow, S&P, NASDAQ, and Russell, and then the sectors. All right, so we need to know what the sectors are doing. These sectors here make up the major indexes. Okay, so materials, home builders, biotech, all right, energy, technology, those sectors make up, right, those indexes. And then your individual stocks, like we looked at the stock here, right? Which one was it? One API is technology. All right, so API is part of technology, and then technology is part of the NASDAQ. Okay, so we got technology here, that's the sector. We have the NASDAQ, that's the index, and then we have the stock API. All right, so there's a good chance if the sector is going down, if the major indexes are going down, NASDAQ, there's a good chance the sector will go down, just like it is here. And there's a good chance that your stock will go down. also. So rather than, so what we want to do first, the first thing we want to do is pay attention to what the market is doing, which is what most traders don't do, right? We just fall in love with the stock because it's popular, right? And we just buy where we don't want to do that, right? We want to know the condition of the overall market, right? Right here, Dow, S&P, and NASDAQ, and they correlate. They will go together. So the Dow, right? The S&P, the NASDAQ, and the Russell eventually will follow each other. All right. So if the Dow becomes bullish, starts moving higher, eventually the S&P will follow, the NASDAQ will follow, and the Russell will follow. All right. See here, they're down. They're all down. They're all down together. Okay. If one of them break up to the upside, the others will follow also. Okay. So this gives us a really, really good chance. Not a guarantee that our trade will be successful, but we want to go with the trend. We want to follow the trend. All right. So if the trend is down, we need to be out of the market, or we can short it. All right. Which means we can take positions to short it. But even when we short it, we are going in the direction of the overall trend. All right. We're going in the direction of the overall trend. Where we get in trouble as traders, all right, is that we're not aware of this and we're just trading. And guess what? We're going against the overall trend. All right. Does that help, Betty?
Tremendously, yes.
Okay.
Yes.
Very good.
Thank
Very
you.
good.
Thank
Very
you.
good. So when we look at what I really want traders to do, even if you're new, is always pay attention, all right, to the market. Always pay attention to the market, because we can, a stock can have, and Dean talked about it earlier, right? The fundamentals, right? There's a stock, and you guys have seen it. We've seen it with Tesla recently. We've seen it with Amazon, where, Tesla, what's the symbol for Tesla? TS, what is it?
TSLA.
TSL. LA, and we'll end with this here. So TSL. So here is Tesla here. All right. I'm sure we would all say that Tesla, we don't think Tesla is going to go out of business anytime soon. Right. Right. So I'm sure it's not going out of business. I'm sure Tesla isn't, right, going into bankruptcy, right? But look here, right? Look here. Stock was $400 here, and now it's at 113. All right. This move here in Tesla, Betty, this move here in Tesla, down move in Tesla, has nothing to do with Tesla, which is shocking, right? This move from 400 to 113 has nothing to do with Tesla. It has everything to do with the Dow, the S&P, and the NASDAQ. And that's a shocking reality, right? That's a shocking reality, that it can fall from 400 to 113 and perhaps go even lower to $50, and has nothing to do with Tesla, and has everything to do with right here, the Dow, the S&P, the NASDAQ, the sectors right here. Pretty scary thought that we can put all our efforts here, right? And if we don't focus on here, right, this is the result. All right. This is why this doesn't matter. Right. That's why we don't pay attention to the fundamentals, not even the symbol. Right. Right. All right. Okay. That's all I've got. All right. For the new traders, right? Keep coming. Betty, keep coming. And keep inviting, you know, your friends and your colleagues. All right. Because this is painful here. You know, we look at this and it just looks like a chart, right? It looks like a chart, but this is painful. Someone bought up here at 400. All right. And now it's at 113. And there's no guarantee that it's going to go up to 400. This is painful. So as many folks as possible that we can show this information to, teach this information to, right? The less we will do this. All right. And, you know, we don't have to make millions of dollars trading. A lot of our traders don't make millions of dollars, don't even make hundreds of thousands of dollars, right? Even if, you know, you just understand how things work, how these markets work, and keep yourselves from doing this, right? And understand that, you know, it really is about the price action. And this is a good example. We know Tesla could be an amazing company, right? An amazing company. And in the future, an amazing company. Doesn't matter. This is what it's doing right now in the moment. And that's all we care about. As traders, that's all we care about. All right. All right. All right, guys. I'll end here. Have a good evening. All right. Thanks for coming. All right. Keep coming. Keep coming. Every evening, there is a different twist that we do. Everything. And, you know, every night you guys might pick up, you might miss something. And then the next time, oh, you grab it. Right. Tomorrow we'll go over stocks, options, and ETFs. Okay. And then, so that's our class tomorrow. And then we'll start back again on Sunday with cryptos, Forex, and futures. All right. Thanks for coming, guys. I'll see you guys tomorrow. Take care. Bye-bye.
Thank you. Bye, everyone. Bye.